and welcome to Bloomberg Quint. Today, Jayesh and I, along with our in-house market expert Neeraj, will be wrapping up the market action for you. 9,600 mark taken, Neeraj. Consolidation for the week, day of losses today.
Yeah, second straight week of losses, right? And frankly, aside of that, I think today was in particular bad because the last 15, 20, 25 odd sessions, we haven't seen the market breadth being so abysmal. Today, I think the market breadth was down 1:4 or 1:5, depending on which index you're looking at. So I think that was probably the bigger bugbear than anything else. So that puts a bit of a spot. I think a lot of liquid names came off very, very rapidly, and that is also a slightly poor sign. I mean, if you look at the Nifty losers, it's not that the Nifty stocks really corrected thick and fast. 2.5% was the top loser. The index by and large less than 1% down. So the index was not a scare as much as the broader markets were a scare, quite frankly. Oil and gas remains the Achilles heel, so that continues to remain a problem for all through these days, the last 10 days at least. Yeah. Oil and gas has been the biggest problem point for us. Right. And today, if you look at the list of stocks which have corrected thick and fast, I was just looking at the list. I mean, look at all the liquid names which has come off. So OMCs continue to bleed. Stocks like Dish TV, Power Finance, REC, these were the names, Delta Corp, these were the names that corrected on very, very high volumes. So the liquid names corrected. Almost everything except for ADAG, their liquid names was down. And if you look at the list of gainers as well, ADAG, JP Associates, Indiabulls Real Estate, essentially the trading momentum stocks went up. So not too much of strength in the movers which went up. All the liquid names came off, and the market with 1:4 on a day when the index was not down too much shakes up the bit of confidence. We were talking about this being a possibility. Maybe it's just a start. Let's wait and watch.
That's that in terms of Neeraj's view. I think how's the day panned out, Jayesh, for that matter?
Absolutely. So, rightly put by Neeraj that, the market breadth was really, really negative. The last time I checked on the Nifty itself, 37 odd stocks were declining compared to, 14 odd stocks in the advancing. So, that has been the scenario. We opened 10 points lower on the Nifty, and we have actually ended more than 50 points down on the Nifty. So, that has been the trend. Every rally has been sold into. But that said, plenty of movers on the index itself. As far as the gainers for the day are concerned, Power Grid 1.8% higher, Vedanta 1.1% higher, Sun Pharma and Aurobindo Pharma too saw some green tick on them. As far as the losers are concerned, we had Bank of Baroda declining 2.5%, Indian Oil 2.5% lower again, and you had Tata Motors and Tata Motors DVR also declining about 2%. But that was only for the day, since we are on Friday, so why not have a look at what made news or how the entire week turned out. Not again as Neeraj mentioned, second straight week of losses, but you had individual movers like Tata Power gain as much as 4.5%, and on the losing side we had GAIL and BPCL down more than 6% each. That said, time to bring in our guest, Mr. Avinash Gorakshakar. He's the head of research at Joinder Capital. Welcome, sir. I want to start off by asking you on the power sector. Tata Power, the top Nifty gainer for the week. Is power making a comeback?
I think, Jayesh, clearly developments in the power sector clearly point out that I think most of the companies are now looking at the government as serious buyers for their assets. In fact, after the CERC ruling, we saw Tata Power, Adani Power actually making representations to the government to take over a controlling stake in their projects. Clearly, with imported coal becoming an unviable kind of issue, my sense is I think these are more of technical bounces which we are seeing. The markets are definitely worried that on these assets, whatever capex has been spent by companies, the earnings potential is definitely now completely wiped out. And I think unless we see that coming back, I don't think these kind of up moves in the market, especially for power stocks, what you mentioned, are going to be sustainable. So probably this is just a technical bounce. I would be more comfortable if some fructification on the asset issue and on the pricing issue comes back, and which I think seems to be a long wait. So probably the markets are definitely looking forward that something could be worked out between the government and these power companies. But net I think on an earnings side, I think FY18 is going to be a lot more challenging for them.
Sure. So please hold on. We do have more questions for you. But before that, Nikki, how did the mid-cap space close?
Sure. The mid-cap space that you see, we see that Jaiprakash Associates, Indiabulls Real Estate, Reliance Communication, these were the top gainers in the list that ended the day well about 14% for Jaiprakash, 6% for India Bulls and around 5% for Reliance Communication. On the flip side, however, if we're just supposed to pull out a chart for the intraday basis, if we could just have a broader understanding. Jayaprakash, again, India Bulls, Reliance Communication. On the flip side, we have something like Fortis Healthcare, Delta Corp, JMT Auto, which ended the day with losses in the range of around 5 to 12 odd%. Avinash, with that, I'd like to understand if there are something attractive bets that we can look in the mid-cap space for that matter.
No, I think clearly, I think auto component companies, as you mentioned, Motherson, Sumi, or for that reason, even a Bharat Forge. Our sense is that, we could see good amount of traction from the auto component space, largely because, the domestic auto market continues to show strong volume growth numbers. In fact, the US markets also for Bharat Forge have actually started moving up after a long time. Another theme which we like is the rural theme, despite the fact that stocks have moved up. My sense is, rural companies like United Phosphorus, PI Industries are typically an Escorts. I think these are companies which could possibly see a further run up in earnings. Clearly, the monsoon has not been fully discounted by the markets, and our sense is in this market, clearly market would obviously reward companies more where the visibility factor is stronger. So these 2-3 themes would actually be worth interesting to look at.
Sure, Vinash. Of all the sectoral indices that we have on the Nifty, on the NSE, the pharma index was the only winner today on a day, where it was difficult to find green. Pharma as an entire pack was up. Do you like anything in the pharma space?
See, I think pharma is again coming back as a kind of a matter of defensive strategy by most of the players. I would say that Cadila Healthcare or typically, something like a Sun Pharma, at these prices, somebody wants to create a pharma portfolio for the next couple of years, could possibly get a decent risk reward ratio because most of the negatives have been built in into the prices.
Yeah. Sure. Having touched base pharmaceutical, I think it will be unfair if we don't talk about IT for that matter. NASSCOM guidance, which has come in yesterday and almost at the similar level that we've seen in the last year, 7 to 8% exports, growth expected in the exports for that matter. I'd just like to understand, is this the right time to get into IT stocks?
See, I think clearly if you look at last year's kind of growth number, it was in double digits, and this time it's tempered down to 7-8%. I would believe that, I think the next couple of quarters are going to be very crucial as to what kind of news flow and developments come from the US market, because that remains the main key driver for most of the Indian, frontline IT companies. So clearly the next 2 quarters, I would not be surprised if we see margin pressures and incremental top line growth getting affected. So it's better to be a little cautious and be away from the frontline IT companies, something like a Infosys, a TCS, HCL Tech. I think we have seen a barrage of buyback offers coming in. The need of these managements is very clear. They want to keep interest in these companies, so they have been distributing cash very liberally. But from a core earnings perspective, I think it's going to be tough, at least for the first 2 quarters.
Alright, I think I'm going to talk about a little bit about one more interesting space, that is steel stocks. Steel stocks for that matter. Despite falling prices of steel, we have seen these stocks performing extremely well. Also, we have been hearing about how these companies have been making it to the IBC. Pretty much they form around 40 to 50% of the total NPA. Do you think some of the large cap names would be interested in buying these distressed assets now?
No, I think any buyer would be interested to buy these assets, if the debt is properly restructured and rescheduled. I think clearly, assets which companies like Amtech Auto or for that reason Bhushan Steel do have are definitely good quality assets, but not at the current prices. I think any new buyer who would come in would obviously like to ensure that debt is definitely, kept out, it's reduced, and then a kind of a bargain offer is made to these buyers, because otherwise, these projects are completely unviable. And I think as long as these companies, have these kind of debt on their balance sheets, it's going to be difficult for them to make any profits on the bottom line.
Alright, rightly said, it's the quantum of haircut that we are looking at for these distressed assets. One more point that I'd like to really ask about is the OMC. Now these stocks have been the top loser for the entire week. What is your outlook on this space?
No, I think, if crude prices continue to go soft, I think markets are fearing that there could be a lot of high inventory losses which these companies would have to bear. And I think technically, whenever crude prices come down, I think they have to pass on the benefits to the buyers, to the retail buyers. So I would believe that, unlike the oil marketing companies, the gas companies would be better placed. The longer term prospects for gas is definitely much stronger and positive, and our sense is that despite a softer crude price, gas players like say Mahanagar Gas or maybe Indraprasth Gas could be decent long term bets. So probably the markets are now looking forward as a structural shift, and probably gas companies could do better compared to oil marketing companies.
Alright, gas companies can do better than what oil marketing companies have been doing. This is our expert advice. Alright, this is all that we have in terms of market trap for you guys. But do stay tuned into Bloomberg Quint for more.